Hello and welcome to the weekly educational webinar from ICM.com. My colleagues Mahesh and I would like to thank you for joining. We chose today to introduce to you more technical indicators to make you more familiar with a variety of indicators that serve for different purposes, allowing you to create a better trading system. So first I'll start by explaining the ADX, average directional movement index, and then the standard deviation. And after that, I will talk about the average through range and the commodity channel index. So the ADX was found by Wallace Wider and to be used on commodities daily chart. Past they used to trade commodities more than other asset classes. So he wanted to have something that helps him in defining the strength of a trend on commodities. But currently we are using the ADX on all other instruments. So this is usually used, as we said, to determine the strength of a trend and also can be used to generate trading signals. The ADX indicator consists of three lines: the ADX line, the positive DI, and the negative DI. The ADX interpretations are very simple. If the ADX is this is the ADX indicator, so this is the ADX line, and these are the positive, the dotted lines. There are the positive DI and the negative DI. We'll be explaining the indicator shortly on the MetaTrader 4 platform. So the interpretation, it's very simple. According to Wilder, if the ADX line is above 25, it means that the trend is strong and can continue further. While if below 20, it suggests that the current trend is weak, or we are in trendless situation or in a consolidation zone. So the ADX, we have to know where is the ADX, or what's the level of the ADX before jumping into any trade. Uh, so this is for the ADX line. As for the positive and the negative DI, their crossover can be used as a signal. When the positive DI crosses above the negative DI, it means that the price is moving higher, and it signals that this move could continue higher also, so a trader would buy. And on the contrary, when the negative DI crosses above the positive DI, it could signal that the market is going to drop, and a trader would initiate a sell position. Also, when the positive DI and the negative DI are far from each other or diverge from each other significantly, they can signal that the current move is extended and it is almost ending. So traders would start looking for reversals. So we're gonna explain also. It's very simple. It's a very simple indicator to be used. We're going to explain the standard deviation now, and then after we're going to move to the MetaTrader 4 to explain both indicators together. So this is everything you need to know about the average directional movement index. Moving to the standard deviation. Standard deviation is a statistic measure. It measures the dispersion of a data set relative to the mean, meaning how much a point or a price in our situation is away from the mean or the average. When the price is away from the mean, it means that we have significant deviation. Usually volatile financial instruments have higher deviations, and investors do check the standard deviation to assess whether to invest in a certain financial instrument or not. So people who prefer high risk would maybe go for instruments that they have higher standard deviation, since it means that there are more fluctuations in these instruments. And on the contrary, those who prefer a low risk or to be conservative, they would look for lesser standard deviation, meaning that they are looking for less movement in the market, which would maybe keep them safer. On the chart, when the deviation is very low, traders should start looking also for a runaway from the moving average. It means that the price is the price or the recent price fluctuations are very close to the mean, and could signal that there will be some catalysts, or there will be some moves, but waiting for some catalysts. So traders will start to looking for a breakout or a runaway from the moving average. While when the deviation is high, traders should start looking for a reversion to the mean. It signals that maybe this current move is extended, so they will start looking for a reversion to the mean. It's very simple. These are two very simple indicators to be used with these purposes. I'm gonna go for the MetaTrader 4 platform in order to explain to you these indicators. So first here you come to under navigator, you go for indicators, trend, and you plot the average directional movement index on the chart. Here you can choose the period, you select the period. So for example, let's put period 14. You choose also here whether you want to apply the analysis or the calculation to the close, open, high, low, or medium price, typical price. So you choose your price. Maybe it's originally set to the close. And here you set the visual. Going for colors, also this is to choose the color for the positive DI and the negative DI. So when you click OK here, you can see this is the ADX indicator. We have it on the daily chart of Brent futures. September delivery. So this is the ADX line, the thick one in green, light green. So this line should be above 25 to signal that the trend is strong. Currently, we are near 25. So here, when the ADX was moving above 25, it meant that the trend is strong, and we've seen oil prices dropping until reaching this low and then moving slightly sideways down until we witnessed this reversal. So when the ADX was moving higher and above 25, it meant that the current trend is continuing. Also here we can see the negative DI, which is in red, what crossed above the positive DI. So a trader would have looked for initiation of a trade here, somewhere here. So the trader would have sold here, but also would have to look for ADX maybe above 25 for more confirmation or a better signal for a trend. And here we can see that the negative DI stayed above the positive DI as long as the market was going down. And here when the market crossed, when we've seen this cross, we started seeing a little bit of a reversal in trend. And here also the positive DI crossed above the negative DI, signaling that the market is going up. So a trader would have bought here somewhere near 26 levels a barrel. The ADX line was near 25, so also this would have initiated a positive buy signal near $26, and currently we're still in the trade, and we're trading near 42. So this is for the ADX. Some of the traders do prefer to use only the ADX line alone, so they do omit these the positive and the negative DI, so they only use the ADX. They have some other indicators to help them get their trading signals, but they use the ADX just to filter the strength of the current trend. So if the ADX, for example, for different periods, ADX 14, ADX 42, ADX 86, ADX 140, for example, they have 4 different periods. They are far away from each other. If all of them they are above 25, it means that the current trend is strong. So they would continue with their trades. So this is for the ADX. It's a very simple indicator to be used. Also, the standard deviation, you can find it under the trend text section. You can go for standard deviation here. Also, you plot the period. Also here, you can apply it to which price, and also you choose the method. This is for the moving average. For example, this is the 20 period from the simple moving average, and we click OK here. So we have this is the deviation from the 20 simple moving average. So if we put here on the chart the 20 simple moving average for the closing price, so this is the deviation away from this moving average. We've seen here when the price went far away from the moving average, we've seen the deviation growing and rising towards $9. So here the difference from the moving average was around $9. So this is the deviation. Is just the dispersion or the numerical factor showing how much the price is away from the moving average. It doesn't mean one of the negativities of the standard deviation. It doesn't give us a signal whether the trend is up or down, but it signifies how much we are away from a trend. So usually when traders see a higher standard deviation, they start looking for a reversion, and here the market reversed slightly, and when the standard deviation is close or very low, they start to look for a runaway from the moving average. Here we can see that the standard deviation is very minimal, since the price is currently hovering near the simple moving average for the past couple of periods. So traders will start to look for a runaway from the moving average, either to the upside or to the bottom. So some traders would start putting a buy stop here and a sell stop here at the bottom, maybe at this bottom. So they go for sell stops and buy stops, waiting for a breakout or a runaway from the moving average. So this is all what you need to know about the standard deviation and the average directional movement index. Now Sai will explain to you the average true range and the average true range and the commodity channel index. Sai?
Thanks, Wael. Hello, everyone. So let's move on to the next type of indicator today. So where we can see next is the average true range. Basically, this it's one of the oscillator. What we're discussing where it's one of the indicators, two type of indicators, and this type of oscillator we've been like basically this ATR has been introduced by Williams Welder Jr. It has been majorly where it's used for majorly to identify the market volatility. So basically, this to identify this. Basically, we don't use it for the signal purpose, but it's namely to identify how volatility the market is, like how type of the market's range has been moved. So when this ATR rise, it means that there is a higher volatility in the market and vice versa. Exactly the opposite version of the rising. So it normally it's calculated in a very simple formula. Mostly this ATR we have been used only to identify to combine with other indicators where you can see the movements, how volume the market is there, how extend the market can be on one side. So basically, much traders doesn't use it for a signal purpose, but they only use it for to identify how the market's volumes are there, how the trends on the one side or direction on the other side of the market. So this ATR is the moving average of TR. TR is a trading a two range, which is, for example, if traded is 1 is 14 and we have TR is a 14 range, so we divide by the 14. That exactly as simple as it is. So basically it's calculated based on the high and low, as well as high on the current price or low on the current price. So it's a very simple type of oscillator, like it's most of the traders usually do for mainly to look into for the stock trading purpose. So where definitely I can show you some few type of live demonstration with the end platform, so we can identify this. For example, from this uh, slide, we can see there is a major turn happen in the market here. For example, here there is a you're like it is like it's close, it's you can see the trend on the bottom, like it's the one side trend, so there is a peak happen in the range. So especially like this is mainly ATR used for two major signals. One that high values which gives the market tops and bottoms, so low values indicates ranging markets. So this is only the purpose of range of this ATR. So this ATR is indicate to peaks before price bottoms, or maybe low to true, average to range readings, maybe the market in the range, just to identify whether market is direction or in the ranging market, or on top or in the bottoms. So this is how exactly the ATR been used to protect. So in this case from here, we can see there is a market is a huge trend on the downside trend, and there's a peak happen here. So whenever you see the market in the consolidations or maybe the ranging, you can see there is no any much type of high value of ATR ranges are being seen in the range. So definitely we'll have a small examples through platform. Let's move on to the next one. It's a commodity channel index. So normally we say it's CCI. Even this is an oscillator based type of indicator, which was originally introduced by Donald Lambert in 1980. So this measures the positions of price in relation and to the moving average. So it's correlated with the price, position of the price, and with the moving average. So from the word, I can see them, it's correlated with the moving average patterns or parameter, which is going to be give the levels. So this can be used in the highlight when the market is overbought or oversold, or to a signal when it's a trend is weakened. So basically, it's like similar to RSI, latest strength index, but still there is some a very good like type of parameter introduced to identify more on the peak level. So it says like overbought or oversold to gives the entry on this. So basically, we say CCI, which is a unbounded indicator. This is basically an unbounded indicator, meaning it cannot give you can go higher or lower indefinitely. Therefore, the traders looks at previous extreme where the price is reverse form. So here, for example, like this can be have a two conditions type of use, mainly for range markets or maybe for a trending markets. But when you say there is a ranging markets, it's going to give you the identification of the levels of 100 and minus 100, the positive 100 and the minus 100. So you can see the high reading of 100 or above, they indicate the price will well above on the historical average, and the trend is going to be strong to the upside directions. The same way, when the low reading below of minus 100 indicate the price will well below the historical average, and the trend has been strong to the downside. So going forward, as I said, that can be used for two type of indication, which is on ranging as well as for the trending. When you say if you want to go for ranging markets, you always go long. You want to go for a buy or trend. If it is CCI turns up, which is from below 100, minus 100, or maybe go short if the CCI turns down from the above 100. Same way, when you're going for a trending market, you have to be on the either side. You have to be on the market. So you have to be on the bullish divergence or maybe the bearish divergence. So this is the main cause of this. So this is one of the best type of oscillator. Mainly mainly the stock trader used to have this indicator to identify the trend. It can be worked with the combination as well, basically. So, there are advantage. There is a advantage also disadvantage of this CCI. When you're talking about the advantage, like CCI can provide an in price momentum. Maybe it can give the confirmations to the new trend or maybe trend reversal. It can both the way. It can be identified in both the sense, like for the upside as well downside. Even this CCI provides the trader to potential on the buy side as a signal side. The main the weakness or maybe the main disadvantage of this CCI is that, as I said, there is an unbounded oscillator indicator. So the overbought and the oversold levels are being subjective, right? So trader should not enter position based on the signals or maybe provided by the CCI. It means that you should not really solely depending on CCI indicator. And one more major disadvantage of this CCI is that it won't estimate, very difficult to estimate the stop loss points by using this indicator. So maybe you can use other type of indicator or other type of support from other indicators. We can use other tools, we can use other to identify the stop loss. So this is a major weakness and advantage of this. If you say let's move on to the from this slide, you can see there is a two levels. This is a minus 100 and this is a plus 100. So as I said that there is a upside directions of move by level of year, maybe like a trend change from the above. So we can see that these two levels of minus plus 200 plus 100 levels have been touched, but the trend is being continued on the one side. But since they'll be trading in between this minus 110 and minus 100 and plus 100, so the range in the markets. So this is a small example. Let's move on to the platform so you may understand better way to know about how exactly to identify. So let's move on to the platform. Let's remove this. So you can plot this from the oscillators. So let's take the first oscillator as a ATR. So here in ATR, there are parameters are there. We can set the default parameters as 14 as a slide. I can keep as your range, like, you know, how far you want to expand your range of periods. You can keep but by default is 14 is always the best to identify. And you can also set the style, which style you want to go for it, and you can also thickness. It's a very simple way. As I said, it's not mainly use it for the signal purpose. It's mainly use it for a market trend. So if I give, so this is how exactly it looks. From here, where we plotted the Brent here, so it's a daily chart where I can see. Let me plot here. So you can see there is a high happen in the ATR, and there is a big move happen in the market from the top. It came down downside the trend. It has continued till there. So same way, whenever you see a range in the markets like here, so there's a consolidation happens in this range. So this is how exactly this has been used for the purpose of to know knowledge about this ATR. So let's move on to the commodity channel index, CCI. Let me remove this. So in CCI, this can be plotted from the oscillators, easily available one. As I said, this mainly use it. Most of the traders, stock trader, use this type of because it has the levels of every range on a daily basis. So you can also have the default time period of, period of parameters of 14, and you can also apply to any of your analyzers. Mostly they keep close, but you can also keep any range of high, low, or a combination of three, or maybe the pivot line or something like that. And also, like, you can choose your colors as you style which level. So let me plot this now. So these are exactly used. So as I said that there is a two range of like 100 plus as well as minus 100. And I said like this range can be used. So same way if you see this range in the daily chart of Brent oil, so you can say there is a market peak happen. So when there is not been market cross, it didn't cross the plus 100 levels. So it has been broke down, and you can see that when it's crossed the minus 100, it gives a trend. So as I said, that this CCI can be used for two things: one for the ranging, one for the trending. Since it has been broken, the CCI gives the signals below 100 level. Obviously, the selling started here. So there's a clear signal shown in CCI, which you can take the advantage on the selling markets. And same way, there is a small hike, but still you can see there's a buy signal coming out. That means the CCI giving the plus 100, but it couldn't break. It's got a failure indications, but still it came down here. So this is how exactly when there is a market in the range, since there is a range market from year to year, so you can see there is a consolidation happen here. This is how exactly CCI helps to identify the trend. The most, as I said, like the most combination of any other indication, which also helps you to indicate to give the signals. As I said, like stop loss are very difficult to identify since it's unbounded type of oscillator. So it will be helps in that way. Thanks, Wael.
If you have any questions, please, thank you, Sai. If you have any questions, please write them down so we can help you. I'd just like to inform you that all the information, analysis, opinion, and news mentioned in this webinar are only for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument. So if you have any questions, please write them down so we can explain further.
There's a question there. What is the best time frame and indicators I use for intraday trading and scalping? Actually, we have been conducting this education webinars since many indicators have been discussed and many technical indication data. So for a scalping or maybe for intraday trading, it's depend on your time frame, what type of indicators you follow, like basically. So, but normally for the scalping purpose or maybe for the intraday, they choose like 10, 5 minutes, 10 or 15 minutes mostly on this, but still it's based on what strategy you follow, how the performance you've been given for this particular strategy. It's all based on that.
There's another question, but it's not clear. This setting indicates comfortable for all time frame or how? Can you please rewrite the question so we can have a better understanding? Usually these inputs that we discussed for different indicators, whether the standard deviation, ATR, um, ADX, or the CCI, they are the default numbers used by the creators of these indicators. So mainly these are the settings, but also you can go for your manual backtesting and check whether maybe you have different insights, so you can choose different inputs. Just one more thing to add for the ATR. You can also look for the ATR since it's the average true range. It's the difference between the high, the low, or the difference between the high and the previous close, or the low and the previous close. So it depends on which one is the best TR, since the equation is the max. So also some traders do use it to set their take profit and stop loss. So for example, if the average true range is 50, signaling for 50 pips, so they go for 50 in terms of their stop or in terms of their take profit. So maybe they go for the full ATR, or they can go for 60%, 70%. So if the ATR is 50, they can set their take profit at 30, 35, and their stop loss maybe at 30, 35 too. So also the ATR could be used to set the stop loss and take profit. Okay, perfect. So this is it for today. Sai, do you have anything to add?
There's one question. Thank you. Straight to the point and easy to understand. Thank you so much. Well and good. Everything's fine. Thank you so much for everyone.
Okay, thank you all for joining. If you have any further questions or you need any support, just write an email to webinar@icm.com or support@icm.com, and we'll be glad to help you. On Monday, we were having our weekly market update, so stay tuned for today. For those who are trading today, also the Federal Reserve will be revealing or publishing the minutes of the last monetary policy meeting, so this could have some impact on the market, so stay focused. And this is all. Thank you all for joining again.